Oh, it's time to get back to work. Weekend is over. Hope you guys had a fantastic holiday weekend, but we got some money to make this week. It's Monday evening already. We got some big news coming later this week and some really beautiful reversals in today's trading session. We're getting ready for Tuesday's trading session. I have a lot of great trades we're tracking for tomorrow. I'm going to cover all my favorite trades in this video tonight. That we have a game plan to make some money on Tuesday. Before we jump in and get the game going tonight, a lot we're going to cover in a very important video. Before we jump in and get started though, make sure you subscribe to our channel that we don't miss tomorrow night's video upload. And if you enjoy the video tonight, do me a favor, hit that like button, give me a shout out in the comments section below. Appreciate you guys tuning in, supporting this YouTube channel. I know nobody wanted to go back to work this week after the Easter weekend, but I think it'd be worth it. Some great trades setting up for Tuesday. So where are the best trades setting up for what might be a very busy Tuesday with that CPI report coming on Wednesday morning? Boy, everything looking pretty bullish right now. Got a beautiful reversal off of the low on the S&P and the Nasdaq. Buyers are in full control. We have one of those great scenarios right now where both the long-term trend and the short-term momentum, right, are both very bullish. Buyers are looking for breakouts going higher. Buyers would love to buy some pullbacks, right? Because you get that nice rotation off the range here. So we're talking about breakouts. We're talking about pullbacks. I do have a couple scenarios to look for on the sell side, and we'll talk about the potential reversals. I could easily see some double top reversals on the S&P and Nasdaq going into the CPI number on Wednesday. So we're going to cover all the details about those trades on the Emini and the Nasdaq. Oil, nothing new there, unfortunately. We're still kind of chopping around back and forth in that really month trading range now we've had since the beginning of April. Talk about breakouts and pullbacks right now. Breakouts for sure. Got my eyes on some bull trap breakouts going higher here. Everyone's waiting for some bear traps right below that low, and we'll talk about some different ways to buy it, right, if it goes lower, and more importantly, ways to trade breakouts using traps as we go higher here. So we're going to we'll talk a lot about oil towards the end of the video here tonight. Now, tomorrow is a Tuesday. Before we jump in and talk about all the trades on each one of these charts, let's make sure we all get on the same page. There isn't a lot on the schedule tomorrow. We've got Janet Yellen is doing a keynote speech or a press conference at 11:30 tomorrow morning. So we're going to hear from Yellen. And then, of course, my boy Goolsbee over here, he's a voter at the Fed, right? He speaks at 1:30 p.m. Eastern time. Those definitely have potential to move these markets around late in the day tomorrow. But I would imagine, though, tomorrow morning, I would imagine will be the best trading of the day tomorrow, because we're going to be staring right down the barrel of that CPI number coming on Wednesday morning. So, I'll definitely watch it to see if Janet Yellen can move things into the afternoon. Austin Goolsbee, everyone's listening into the Fed right now to see, what their opinion is about their rate hikes, right, coming in the month of May. So it has potential to be a market mover. No real major news in the morning, though. So we're kind of wide open tomorrow. Again, we'll see how we do here, because, it's tough to think the market's going to make these big moves tomorrow afternoon with that CPI number coming on Wednesday. So my job tomorrow will be get in early, try to get something going early. I'll gladly leave some trades open tomorrow into lunch, right? Tomorrow afternoon, maybe get a benefit, a little boost from Yellen and Goolsbee. But you got to think going into the afternoon, tomorrow afternoon, though, I would imagine a lot of the bigger money will probably be on the sidelines ahead of that CPI number coming on Wednesday. And you better come back tomorrow night, because we'll talk more about the game plan for what really is the biggest news of the week, right? Which, of course, is on Wednesday morning. Now, back to our charts, though, right? Because, of course, the money is made on the charts. And, of course, I'm going to go through each one of these charts right now and talk about my favorite trades. If you like making money, I would definitely make sure you watch all the way to the end, because every trade I talk about tonight can be applied to your favorite market. And you know me, I'll find a way to tie it all together and make it worth your time to stick around all the way to the end. Over to the S&P though first. We'll go S&P, we'll go Nasdaq, and we'll wrap things up on the crude oil to finish off the lesson here tonight. First of all, these are all tick charts here, guys. You can find all the time frames in the upper left-hand corner. These are all tick charts. This is the 21 EMA, 21 exponential moving average. And as always, I do provide some higher time frame charts linked up in the description of the video here tonight. I've got some 60-minute time frames, some 4-hour time frames. I like to use the 60-minute chart as a directional bias. I like to use the 4-hour chart to give me an idea of where I am in the big picture, right? Overall, major levels above and below. So if you want a good companion for the video tonight, definitely check out those 60-minute and 4-hour charts linked up in the description down below. Now, with that said, now that you know what you're looking at here today, what's the most important factor on the S&P and the Nasdaq? Well, as I mentioned a few moments ago, we have one of those kind of great situations where we have short-term a very bullish momentum. And if you go check out the 60-minute chart and the 4-hour chart, you'll see we're pretty bullish in the medium term, right? Medium to longer term. So short term and long term, right? Quite bullish right now. That is why I say buyers are likely looking for some breakouts going higher, right? Or some pullbacks here for tomorrow. Kind of the next most important factor here is this trading range. Now, I know that most of us probably weren't paying attention late in the day on Thursday. We talked about that short squeeze at the end of the week last week, right? What a great example of just focusing and chipping away at the game plan we had all week last week. Well, if you recall, they had that jump up into the end of the day on Thursday. Friday, of course, was a kind of a holiday, right? We had kind of a quarter of a session there. That creates a range. Ranges, if you're taking my free trading course right now, inside the free trading course, we talk about ranges and we talk about rotation. And how oftentimes the market will make these big breakouts. The bears will try a couple times. When they fail, the market will start to swing, right? It'll rotate higher. And if you guys watch these videos a lot, you know these types of what we call rotation off the low, right? Kind of rotation off the low. These can be very powerful, right? As the bears get trapped around support levels below the range. And then now, as this squeeze begins to happen, right, you got to think right now the buyers would love to take out this high, right, that the non-farm payroll high at 46 3/4. You got to think the next objective is take out this pendulum swing, which is basically just the amount below and the amount above. If the buyers really got their way this week, and it might be a bit premature ahead of the CPI number coming on Wednesday, but you would think that 41, 71 3/4. There are very similar levels to this on the NASDAQ as well. So this kind of bullish rotation off the low, knowing that we have a major high up overhead. Okay, that's what's on my mind right now. I want to be a buyer. I will talk about some short side trades. What I want to do, though, is I want to talk about the pullback, right? And I also want to talk about the breakout going higher. So as over the next few minutes here, I'm going to blend together the S&P and the NASDAQ, and you'll learn all of these. The most important thing, let's talk about if the market goes higher first. The most important thing going higher here is that we're going to be getting into some very obvious resistance overhead. And so we're very bullish right now. There's no doubt about that. If we go higher here overnight, and remember, guys, we don't want to make predictions. We want to put a game plan together. That way, if we do go higher, we're ready. If we do go lower, we're ready. If you make predictions, you kind of back yourself into only one way to make money, right? We can do better than that. So I want to go over those scenarios, and then that way you can kind of see, well, no matter what we get tomorrow, because nobody knows where we're going to go tomorrow, right? Don't lie to yourself. Anyways, so if we go higher, what's my concern? My concern is I'm buying kind of high, right? Relative to that prior high from those non-farm payroll highs. So and we talk about this a lot in the free trading course. Whenever we are very bullish, right, and we have a general idea of where the market wants to go, but we're concerned about buying too high, This one entry pattern we always look for, right? And those are called traps, right? In this case, it's a bear trap, right? Below that low. Now, look at how this thing sets up, right? Look at the structure of this, right? So now the scenario is we open up in Asia, we're grinding higher here. We're barely pulling back to the moving average, and we're getting these higher high in prices, right? I always say strong move, shallow pullback, higher high in price. What do we say? Traps, baby, right? Traps. Now, if I can get a channel kind of off that high, off that low, that'd be fantastic. It's not required for this type of setup, right? Because of that rotation off the low. But as we're going higher, think about traps. Okay. Now, eventually, right, if we do end up kind of grinding higher, we're getting some traps again, just as we talk about in the free video course. Eventually now, we're not going to want to buy way up here, right? It'll be a little too high to buy. This is where a deep pullback comes in handy. Okay. Now what we'll do is we'll go out, I'll draw a trend line off these highs, bring it down around that low, and this is where the 21 moving average is your best friend, right? So we're grinding higher. Now, again, looking for shallow pullback traps, right? Shallow traps as we go higher, but eventually now, smart money's not going to want to buy way up here. They're going to start taking their profit, and we expect the price to pull back. When the market pulls back off this high, we have all of that bullish momentum, and there's basically a bullseye to go back up and retest that high again. The key now is getting the entry. My favorite entry is I like to get below the 21 moving average, and hopefully we'll get some sellers who think this pullback is a reversal. If those bears can short, right? If we start seeing them get short off the 21 EMA, think about where their stops are. Okay. Most importantly, like I teach it, think about where their pain is. If I can buy right into their stop loss, remember it's an overall bull market. If we can trap or rope in some of those sellers, right, underneath the moving average, we can use their stops as fuel for something like a failure pattern, like I teach in the free video course, a pullback combination. We get back above the moving average, right? Failure, pull back. Again, these are the same exact setups you guys are learning in the free video course, right? So traps on the way up, and then think about finding that bigger channel once it drops. Speaking of traps, right? Rope in or trap in the sellers. Use their stops as fuel, failure pattern, right? And then, of course, up, over, grab that first pullback setup, and the goal, of course, is to retest the high. Traps, failures, pullbacks. Now, I know that most of you guys have taken the free trading courses. You've learned all these setups, right? You're making money with these on your own right now. But if you're here watching for the first time, if you're one of the few folks watching who haven't learned these entry tactics, I'm going to put a link up here for you in the upper right-hand corner, a little pop-up right there. Grab that link, take the free trading course, because the strategy that I teach in that free video series will show you a simple trick to know exactly where the best winning trades are going to be that day. And I'll teach you 4 different entry patterns to help kickstart you making money on your own account. If you're tired of missing the best trades each day, if you're taking too many losses, take that free course. You will learn all about things like traps, right? As we go higher, how to draw big channels, how to find channels by drawing them off the highs, how to get those deep pullbacks, and most importantly, how to use the moving average and not let those deep pullbacks fool you in the reversals, and then using those stops as fuel, right, for that run going higher here, right? Does that make sense? Okay, so I like that. Remember, as we're going up, traps, right? Then that deep pullback as we go. Those are a couple trades I'm watching here for tomorrow. The same thing applies here on the NASDAQ as well, all right? NASDAQ can easily apply as well. Now, let's get a little bit more advanced, okay? Now let's talk about what if we pull back? You know, that's definitely likely, right? We go back to the prior week close. We could easily see a pullback right here. I want to talk about a pullback. I also want to talk about some reversals, right? Because in all reality, you know, we get some big news coming up later this week. I want to talk about some reversals as well. Let's go to the NASDAQ real quickly. Like I mentioned before, the S&P and Nasdaq are very, very similar. Nasdaq is also very short-term, right? Very bullish. Again, look at the 60-minute chart. 60-minute chart, 4-hour chart. You can't call those bear markets right now, right? We're short-term bullish and we're long-term bullish or medium-term bullish, whatever you want to call it. We have almost identical, right? Got that range. We popped up that beautiful squeeze we talked about before the Easter weekend holiday. And of course, right, they pound going lower. We oftentimes do get these what we call snapback moves after a holiday weekend. We're now rotating back up. And again, this range, right, they're going to want, oftentimes, these will swing and punch, right? And I didn't put on this chart. This one's a little bit bigger than I would like it to be. But if I measure the amount below it, if I kick it up, right, and kind of project above it now, where does it put us? It pretty much puts us right around that 13,348. Look at the 60-minute chart in the description, and you'll see, right, this is a very, very big objective. You know those buyers, right? They want to get up and they want to punch that ticket up around that 13,320 area. And again, with this kind of rotation off the low, it's not far-fetched to think that will happen. The big variable, of course, is that Wednesday news event. All right, so a lot of similarities here. Again, market goes higher, same game plan I just mentioned on the S&P. The big question, though, is if we go lower, right? If we go lower here, there's going to be I would imagine there's going to be a little bit of shenanigans, right, on the move lower, just because of where we are in relationship to that high. The most important factor right now is don't overthink the situation. I'm always telling my students, don't overthink things. I know there's a lot going on in the charts these days. It's a wild world out there. Lots of headlines coming out. But right now, we have one of the most potent chart patterns you're going to see. It's called a pop and grind. Now, if you're a student of mine, you're going, don't give this stuff away, man. Don't give this all away. I get it. I get it. But you were brand new at one point as well. If you're new to this stuff, see how it kind of pops up and grinds and grinds and grinds. I'm telling you right now, these are one of the, we'll see what happens tomorrow, but these are one of the most reliable types of channels you can draw. Right, first of all, very bullish momentum, right? Very bullish momentum, very strong run up. Anytime we see a strong pop up like this, what do we expect? A pullback and a retest. Okay, so I'm okay with the fact that we're up around some of these big highs up here. Pop and grind on the Nasdaq. Look at the S&P. Right? See, it kind of pops up, kind of grinds. Same idea, okay? It just looks a whole lot prettier on the NASDAQ right now. Why do I mention that? I mention that because when we pull back, and it starts to get kind of scary out there, and you go, oh boy, maybe this is the reversal. They did it over here. Remember, very strong, right? Very strong bull move. Now, I'm not in the business of picking the bottom of this move, right? I do have an idea of how large that pullback will likely be, but I'm not in the business of picking a bottom, right? What I'm going to do is just like I mentioned before, once we get down into that channel low, right? Now, maybe the bears, maybe they do take it lower, and we'll talk about that here in a moment. But chances are, when those bears come in and try to short this thing going lower, they're probably going to get stopped out. And that's the easiest way in my eyes to make money on these, again, kind of these pop and grind channels. So if we do pull back on the NASDAQ or the S&P, I'm not going to overthink this. I'm going to think about that bull pop and grind, that strong move up, trying to pull back and retest. I'm not going to get crazy aggressive, right? I'm not going to buy, just put a buy order sitting right there, but I will look for those bears to come in. Once they sell short, we now would know exactly where their pain is. And like my first mentor told me, over 15 years ago, the easiest money you're ever going to make is when you are long and the counter trend sellers are trapped in a losing position. And again, this is what we go looking for, those failure into pullback. Now in this situation, right, we pretty much know what's going to go, right? They want to take out that high. So failure, pullback, strength move, and then if we keep going higher, right, those traps okay, inside my free trading course, what do we call this? The price action cycle, right? That's a failure pattern. There's your pullback pattern, strength move going higher, and those traps, okay? Remember, you want to get those before we go up and retest that high. All right, looking good. Now, a couple more things I want to go over here, right? Because this, we may not be this clean here for tomorrow, right? So let's talk about something here. It would be great if we pulled back a bit deeper. Deep pullbacks are fantastic because they allow you to risk small to earn large, right? Deep pullbacks are fantastic. The problem is, well, not the problem, but the price you pay. Remember, there's no free lunch in trading, right? When you get a deep pullback, it gives you a lot of reward for a small amount of risk, but the price is this. The price is momentum, right? When you see really deep pullback, it's usually pretty sharp, okay? And you have to give the sellers now the benefit of the doubt. Now, watch what I'm going to do here right now. Okay, we talked about failure patterns earlier and how we like to get the bears to sell short, right? Trap them in and use stops as fuel. If we really get a strong, sharp pullback, right, overnight, down around this 13,088 half area, for example, here on the Nasdaq, the similar level is marked up on the S&P. These sharp pullbacks, you have to anticipate now the bears are going to try to run this thing lower and undoubtedly take out that low. We have to give those bears the benefit of the doubt. This is where the two-try failure comes in handy. We call this the two-try rule. It's a pretty simple idea, right? I want to be a buyer, but if the pullback is really strong, I'm going to let the sellers try a couple times, right? Let them try twice, if you ask my opinion, right? Then we know everybody is roped up. Now we know their stops are there. Nothing has changed, by the way. We still have that strong run up. They're still going to want to retest that high, right? That's their objective in this scenario. And so once those bears are roped in, now we can use their stops as fuel. Now, I mentioned earlier that I like to get these failure into pullback combinations, right? Failure pattern, pullback setup, back to retest the high. Be aware that oftentimes when you get these two-try failures, the market, like back here, look what happened back here. Strong run down, bears try once, bears try twice, right? You get your quick little scalp, right? Not much of a scalp there, much bigger than scalp, right? On a faster time frame, this is a pretty big, right, move higher, right? But there is your two-try failure. Now, look what happens after the market shoots higher. Nobody wants to buy way up high. What do? They buy it again on the trap. Okay, these are really, this is, again, it was kind of messy on this one, but this is the example of what you will be thinking about over here. Okay, so now imagine we trap the bears in, right? And now it's got so many bears roped in, the price now punches higher, and as we're going higher here, we now begin looking for traps. I would love to go out, again, I would love to think we're going to get that pullback combination, but oftentimes you don't, right? Oftentimes all you get is that two-try failure. There's so many stops to get hit. It just kind of punches higher. We don't want to chase after it, right? We want to buy high because then we're buying too close to the objective. And what's the best entry pattern when you're not trying to buy high, trying to avoid that mental mistake? It's a trap, right? In this case, it's a bear trap. So just be aware, right? Be aware of this. If we do end up getting this kind of shot lower, a lot of times in these bull markets, they'll get a shot going lower and they'll kind of stumble around a little bit, right? And then all of a sudden the bears are roped in and bam, right? It snaps right back up for that short squeeze, okay? I want to cover one more scenario here, and that is the reversal. The hardest part about being a seller right now is all of this bullish momentum. We're long-term bullish. We're also short-term bullish. So even if we get a real strong move down, I'm still going to look for the bears to get trapped in and go back to retest the high. It's not easy to find a short. If we're to shoot lower, it's just, in order for us to turn over and become bearish, we put ourselves in a very difficult spot. So tomorrow, if we do end up V-topping and running lower, we'll have to work that out tomorrow morning in the trade room. Not going to be easy. The easier way to short this, in my eyes, is a double top, right? So we have remember, the key right now is we have this strong run higher, and we have to anticipate a pullback will want to get retested. Once they retest now, this is where I definitely think a crown reversal or a 2-try failure could definitely come in handy, right? The professionals are buying that pullback. Okay, professionals are not buying that retest. Why? Because that's the objective, right? That's where the market wants to go. We should be taking profit in that area. If it keeps on going through it, right? If it keeps on breaking through it, then we start thinking about that game plan I talked about on the S&P. Right? If we keep on rolling through it, okay, now it's bear traps, right? It's finding those bigger channels. I know I'm messy with the drawing right now, but that same game plan we talked about in the S&P, that's the scenario we have there. But I want to paint this picture for you because this is a great way to kind of double your profit, right? Double dip tomorrow. So we get the deep pullback, maybe we get a 2-try failure, right? Deep pullback there, back up to retest the high, right? The bears, of course, get trapped. The buyers buy it. The smart money starts taking off a good chunk of profit when they retest the high. Now in come the rookies, right? Oh, we're bullish. Let's buy the pullback. No, right? A horrible place to be buying. This is always the hardest part about trading, right? You get these sharp pullbacks and you're like, oh, shoot, I'm not going to buy that, right? I can't. No, well, you should be buying that, right? We have to be, remember, the uncomfortable stuff is where you make the money, right? It really is, right? Get comfortable being uncomfortable, right? The best money is made buying as the market goes lower. If we're trying to go in and buy high right now, you're asking to get your ticket punched, right? You're asking to get your stop run. So if we do end up going higher here now, we don't have proof of that breakout. And now we start seeing buyers once. Now we start seeing buyers twice. Now think about where, if we reverse, right? If we fail off that high, where do you think the market wants to go? It's going to want to take out that low because that's where buyers can buy low again, right? If you're a buyer going, okay, where can I buy low? Right here, right? This is where I can now buy low again. Not up here, right? Not up there. Okay, we can buy low again if we break out and then pull back. Now we're relatively low, right? Comparatively speaking. But right now, right, horrible spot to be a buyer. This is exactly where one of those 2-try failures, I call these double top reversals, can be a very easy way to pick that reversal right off of the high. This really, to me, from what we know right now, and obviously a lot can change between now and tomorrow morning, but based on what we know right now, this is the only real safe bet we have right now to look for a short. We have to basically absorb the buyers, let them get what they want, right? Let them get the retested high, and then see if we can't rope in some inexperienced traders up here and basically use their stops as fuel. Remember, when you're going against the overall momentum, you don't have the wind at your back. You don't have momentum to help your trade succeed. Okay, it's very difficult to make money going against that trend. So you need some sort of fuel, right? Some catalyst. And that's why stops are so important, right? So that's the way I would look at this. And then from there, this may end up being one big trading range ahead of the CPI report tomorrow. Now the moving average comes back down, right? The bears get caught chasing again, and we're right back up. We run stops, right? To buy low, sell high on that trading range. All right. And again, if there are some different scenarios tomorrow, we're going to be there tomorrow in the trade room and we'll work it out. Right. But this is where I see the most reliable money making opportunities here on both sides in the S&P and the Nasdaq. What do you think? Am I crazy right now? Am I missing something? I would love to know your opinion in the description or on the comment section here on the YouTube video. Last but not least here, wrapping things up on the oil. Boy, it feels like Groundhog Day here at the end of this video. We're still very bullish. You can't look at this chart right now and say we're a bear market. I don't care what the fundamentals are or whatever the news headlines say. We're pretty bullish. Again, if you go in the description of the 60-minute chart or description of the video tonight, you will see a 60-minute chart in the description. And I mentioned this last week. Oftentimes you'll see these big pops up into a range. And right now there's like this big 60-minute channel. and we're sitting right on that channel. You know what I mean? Sometimes what happens is you'll get, this was kind of that OPEC production cut, right? We heard back end of March, early April, and we've basically been trading sideways here. We'll likely eventually run into some channel at some point, and that will be the catalyst, right, to push it going higher here if we don't get the pullback I think everyone and their brother-in-law is waiting for right now, right? Again, you'll see that channel linked up in the description of the video. This is a very simple game plan. It's bullish into a trading range, and ultimately we have to think everybody wants to buy low here. The way that you buy low in these situations is you wait for the pullback. You wait for some foolish seller to come in. Hopefully they're not. Hopefully there still are some bears out there who foolishly sell into it, and we use a classic failure into pullback combination, right? It's really quite simple, right? This is 90% of the trades you'll see on ranges. Again, I'm not trying to pick the bottom on this thing. We're not picking anything, right? We're waiting for the pullback. I'm letting the bears come in and show us they're in. And we'll talk more about this, tomorrow in the trade room. You're going to learn all about these patterns in that free video course. And so, they run lower, right? The bears commit. Now we know where stops are. And usually on these types of trades, the only kind of question mark is, will we get that pullback combination? Oftentimes this thing shoots lower. The bears come out, they get trapped in. There's so many buyers waiting for it. It just punches, right? And you don't get any pullback. If that is the case and it punches going higher, what do? We look for traps, right? So if this thing just rips off of that low, right, you might not get that pullback off the moving average. That's okay, right? That trap will be good enough. Okay, so failure pattern, trap pattern. Every once in a while, and I could easily see this happens on the oil, we'll get a V bottom, right? So the market will kind of plunge lower, but there's so many buyers that are just been drooling over that pullback that we don't get one or two, right? All that happens is it kind of V bottoms, right? There's so many buyers down here, and so at that point now, it may V bottom and begin to grind up like that. We talked about how confident you should be in those, what we call pop and grinds, right? Drop the high, off that low, and it's just a matter of time now to that point where we get that first test off the low of that channel. We call these, as we would say, first test is the best test. So find that channel drawn off the high, and then we're looking for any of the entry patterns you guys are learning in the free trading course, right? It could be a trap like this. It could be, get me underneath the 21 moving average. That sets up then into a failure pattern as the bears get caught getting short, failure into pullback. So, any of the entry patterns you guys are crushing it with right now, right? That can be used off the low of that. So it's very difficult to visualize this going too low and being reversal, unless something happen, something will have to really dramatically happen in Ukraine, out of China, something would have to happen, right? There'd have to be some headline like, the war's over, or China's locking people down back again. There'd be some huge change in the perception of demand of oil to cause that, and we're just not, we're not there just yet. The next thing too would be if we go higher. Now, this is easy. If you watch the beginning of this video, you know that ranges love to rotate, right? There's a little tiny range right here. And so this could easily rotate higher. We have to think, though, the buyers are, their objective is that 81. So, if you watch the beginning today, what do we look for? If this thing starts to punch, right, kind of punches and begins to grind, we're looking for what? We're looking for shallow traps, right, as we try to make out this move here to 83. Once we get a little bit too high, and we'll talk about kind of what I mean by that tomorrow morning in the trade room, then we start going, okay, let's find some bigger pullbacks or find some bigger channels. We know we have that strong move, which is probably going to want to be retested. It's an overall bull market, so I'm not thinking about shorting that top. right? That's one thing, right? This is where the 60-minute time frames really help me get more clarity, right? I'm not looking to short up here. Again, in this example, we're bullish in the short term and we're bullish in the long term. If I was bearish in the long term, right, I could then justify, well, maybe it could be a crown reversal in short, but we're not there, right? We're not a bearish overall market. Stick to where the easy money is made, right? And the easier money on this is not trying to pick some top in a bull market, right? It's, again, get those bear traps on the way up and then try to get that nice deep pullback, trap those bears in and punch it right back up, right, to retest the high. Don't trip over nickels and dimes. Don't trip over dollar bills, right, to pick up nickels and dimes, right, as the saying goes, right? So focus on that long-term direction. Filter your trades based on what you're seeing in the short term as well. And we get a good game plan here for these markets here for tomorrow. Got a big day tomorrow, right? Big day tomorrow. It's a big question mark going into that news report on Wednesday morning. So I would imagine a lot of traders are going to be at their desks bright and early tomorrow. All the markets going to reopen tomorrow. Some markets were closed today, still after kind of the carryover from Easter weekend. So don't be late tomorrow. We open up at 8 o'clock Eastern time in our members trade room, 8 a.m. tomorrow morning, every morning in the trade room. If you want any more information, if you want free course links, membership links, all the time frames we talked about tonight, they're all linked up in the description. If you have any trouble getting into anything, the free classes, the membership course, whatever it is, definitely pick up the phone, give us a call, shoot us an email. We got live chat as well, and we're always here to help out. If you need help, I'm here to help out along the way as well. Hope you guys learned a bunch in the video here tonight. Hope you had a great weekend once again. Always going to be back here on the video newsletter. Now get out of here. Enjoy your evening. We'll see you tomorrow morning in the morning trade room. If not, you better come back tomorrow night, and we'll do it again tomorrow night, getting ready for what might be a wild Wednesday, CPI Wednesday. Guys, my name is Joseph. Thanks for being here. Be well. Be nice to each other out there, and be here next time, will ya? Adios, amigos. Bye-bye for now.